Hey, morning traders. Good morning. This is like the worst angle of all time. I'm using this Huawei with this little creeper nose camera here that like pops out um of the keyboard itself. So good morning everyone. Happy Thursday. It is June 29th. One more day and then we get into July. So it's going to be a long weekend coming up. We have Independence Day July 4th out of the US. So happy holidays to all my American friends. Markets are going to be closed Monday and Tuesday. Monday, I believe it's a half day, so there's nothing going to be. It's not going to be that great, right? There's not going to be that much volume, so we're going to be closing the trading room for 2 whole days. So check out your emails. We're going to send you some stuff for the long weekend. I hope everyone has a great long weekend. We'll talk about this tomorrow again, but first and foremost, let's go through some news. Yesterday, at the end of the session, at the close of the session, we had the stress test reveal. So all 23 banks have met minimum capital requirement under the Federal Reserve's 2023 bank stress test and would be able to lend in hypothetical severe global recession. The variables under this year's exam included losses up to $541 billion stemming from items like mortgages, credit cards, and trading activities, as well as a 40% decline in commercial real estate prices and unemployment rate rising to a high of 10%. So while the largest US bank passed the test, it was only a few months ago that three mid-sized regional banks failed. Higher interest rates have led to lower asset values and higher deposit funding costs, and at the same time, that customers rush to the exit to the exits by pulling their deposits. So in today's results, confirming that the banking system remains strong and resilient, Fed Vice Chair and Supervisor Michael S. Barr. At the same time, the stress test is only one way to measure the strength. We should remain humble and how risks can arise and continue our work to ensure that the banks are resilient to a range of economic scenarios, so market shocks and other stresses. The annual health check dictates the required size of each bank's capital buffer, which refers to the extra cushion of capital that's set aside on top of the regulatory minimum needed to support daily businesses. So they're important for stockholders because the results determine the level of dividends and the amount of stock buybacks that the bank will be permitted to do. Lenders will also be allowed to disclose their plans after the market closes on Friday, but some have indicated that they'll wait to announce their returns until they get a clearer picture of the new capital requirements. So, realistically, that was the main news. Jerome Powell spoke yesterday. We got a decent rally in the market. Today, we had the GDP Q1 final results. We have a little downside from that news in the morning. We had the initial job claims as well as corporate profits. Today, we have pending home sales, EI natural gas inventories, and the Fed's balance sheet to wrap up the day. Micron Technologies, one of the chip makers, also reported a Q3 loss, not as bad as it feared, popped up a little on that news. Apple nears the $3 trillion market cap mark, which at Wedbush thinks it could be more. In terms of other news, Microsoft, Activision, Blizzard ruling on FTC suit next week. Nvidia revenue could be hit by a new AI chip curve, which we talked about yesterday. But there's not too much necessary news other than the bank stress test, and then we have Jerome Powell continuing with the ECB this week. So to talk about opportunities in the markets right now, what we got going on is we got a slight little pullback from these mid 30s. We had quite the rally right from that low just a few days ago, 43.68. And now what's going on? We've gotten a rally over the last 2 days with constant bid. Now, what's shaping up here is we have a lot of volume that's concentrated into these teens. The way I see it is the top of the distribution block on the S&P 500 is 44.22 to 24. As long as price continues to bid above that level, I think we can get that next leg to the upside. My daily target today is 4444. Just fours across the board, with the final area for buyers to hold between 13 and 15 right now. They need to hold this area to see that next leg to the upside. A lot of volumes building out there. So if we're bullish, it's going to have to be above 422.24. That's where we get convinced of the bid side, the long side. Otherwise, it could get just more of a choppy day, sloppy day. And then Friday's out tomorrow. We have the quarterly rebalancing. We have the end of month rebalancing. We got a lot of stuff going on there. and we have Friday. So Friday is typically fairly bullish. So we'll see how that um, continues, right? I have a slightly bullish lean on today's trading session as long as my key areas hold. I don't really like longs below that 44.15 region, 13 region, but I didn't mean to do that. Sorry. Couldn't do anything about it, but I do like longs from there. But I would much rather see the 44.24s rebid on the upside for the long side today to see if that can sustain. Otherwise, we just get back into the balance and it becomes a trading sideways range that could be kind of crappy. And remember, we'll be wrapping up the week tomorrow. And Monday, Tuesday, we will be out of these markets enjoying our long weekend. So, as my coffee mug says here, every day is a start. So I'll see you guys tomorrow. Take care.